Boom. We are alive, ladies and gentlemen. Thanks for joining us on this educational journey we are on here. This is actually kind of funny. Some of you will appreciate this. I opened TradingView to look at some of my charts today, and I must have clicked and reloaded an old saved kind of layout, because when I opened my charts, this is what they look like today, which for those of you that have been following for a while, you might recognize some of these colors. This was from a trading layout we had saved all the way back in like 2018. And this is when we created the indicator. So I think what happened is the other day when I was showing you guys the bear claw, which is a variation of the super guppy, or what's effectively more, I guess, technically correct, and just it's a bunch of stacked exponential moving averages and two simple moving averages here as well. So right now we're looking at Bitcoin on the daily with this super guppy or the bear claw. And when I uploaded that and I reused the script, it seemed to have reset all of my charts. So I also had the eagle's nest, which was a variation of something we used to use, the ADI, ADX, and histogram, which is a type of money flow, and another variation of money flow indicator. So this is what I used to use way back in 2018. I started to remove a lot of this, I don't know, colorful charting style for a few reasons. It seemed to create a lot more noise than I was interested in terms of my trading style. And I was looking for, okay, what's the best data to know that we are either in a bullish or a bearish market and about to change over. So there were a few things. We started to simplify. Obviously, we removed many of these and we started to focus just on the horizontal trading ranges. So I wanted to point this out because, well, first off, it's going to take me extra time just to get the charts back to where they were, but it might help to look at some of this stuff too, kind of with a fresh view, just to see things under a different color scheme this time. So I wanted to use Fetch as the example, which is that we're looking for kind of middle range distributional charts that just add kind of one last opportunity for this cyclical bull market and the way things kind of move. So as you can see here with Fetch, I have to go to the 2-day to show the depth of the price movement here. So I remember making a post on Twitter saying, profits have been starting to be taken by some of the big players, and this is probably the first intermediary distribution we're about to see. And I wanted to go over that thought process one more time, just because I thought it was really valuable. It's also valuable for me to reiterate for myself as well, but Fetch is up like 30 to 50x, depending on where you measure from, in the last year. That's very high. That also includes one market cycle up, a distribution that went into reaccumulation, accumulation that turned into reaccumulation, which is awesome, even more powerful, and then stepped up into new all-time highs. Generally, this is where you see distribution and some type of reaccumulation. So I'm expecting a change of character here, and we've kind of started to see that with Fetch here as well. So some of these other indicators might help us look into what that means. So number one, let's go back out to the daily here. What's fun about the bear claw is all of the stacked exponential moving averages. And on the daily, we often return to the bottom of the EMA strand, which is exactly what happened. And just below it for the spring, inside of our reaccumulation. So for us now on Fetch, that's as low as $1.70. So one of the things I recognized that was happening a little later than I should have with Avalanche was that the top part of what appears to be the buying climax, shakeout, and automatic rally ends up just being the primary support, and before either a new run up occurs and then a bigger change down. And we've seen these ones a few times. There's a few different ways to look at what distribution looks like, but more importantly, one of the simplest ways to do it is just to look at where we've been already. So if Fetch is up 50 to 60x, we've seen multiple accumulation, distribution, accumulation, reaccumulation. The next thing we would expect to see is some type of distribution. Now, it's not always the case. There's a lot of room for upside potentially, all this new conglomerate between the ASI token for Fetch here. It's interesting, but I think it adds a lot of mud to the water as well, which means that being here up this high is cause to be more defensive about any productive capital that came from these trades. So one of the things I thought was fun is that there's variations of this. So we're going to use Solana now. So here's, again, my super colorful chart additives to the previous market drawing. So you can see our beautiful accumulation range here for Solana. And look how well it plays with the EMA bands here on the 4-hour. The other thing, sorry, it's a little bit hard for me to see. I wish the colors didn't change on this. I'm going to have to go back and figure out how to reload my 2024 data. It's so much better. But there's some fun things here. Again, you can see how as we stayed under the creek, we also stayed locked under the EMA bands. Each of these times we came down from the buying climax for Solana. So here for Solana, we're pretty convinced that this was going to be reaccumulation because it was so early on in the market. We stayed right below the EMA bands. Once we hit the spring, we jumped back above not only the EMA, but the simple moving averages as well. Retested the creek right on the top of the moving averages. Again, we talked about this with the point of control, and then we saw a big breakout. So generally, we've had our SOS, our backup phase, our SOS and LPS, and sometimes there is more. There is often more, that this is the first part of the SOS and backup phase. But it's very easy for us to make an argument that we're actually further than that, because this was the first reaccumulation channel we marked, and here was some of the very first ones we were watching between the first month of October as everything started to blow up, the very first reaccumulation channels, and they were very small and very tight, almost to the point where this was such a tight channel here. Spring, SOS, backup, boom, massive breakouts upon those. And now each of these, the volatility has increased as well. So on this market upcycle, you had 100% up from the first reaccumulation channel, followed by a 40% decline, 100% basically from this reaccumulation channel to the top. And I suspect that maybe a 40 to 60% here from decline. That could put us significantly lower than we're at today. So the next thing we just want to do is keep a really close eye on this, because I think that what is going to happen, Bitcoin is going to tease everybody. We've seen an astronomical run up in price already. I'm just going to have to get rid of all these colorful pieces. Sorry, I don't like them here as much as in 2017. I don't know what I was thinking. Oh, yeah, dang, all the colors are the same still. Okay, either way, for Bitcoin here, I would like to see a revisit of the bottom of the range, but we have an high up as well. And that's important to remember, that because we're already up significantly in the Bitcoin price structure, seeing a reaccumulation range where resistance is built down here at the previous kind of SOS mark between 50 grand isn't out of the boundaries yet. Or you see something like this, price drops down, you get like a real type of nice momentary spring and reaccumulation. So again, I just want to iterate, there's two main thought processes here. Either we stay within the trading range at 60,000 and we break out, or we come all the way back down to 50,000 and then break out. Both scenarios are bullish in the long term, but there are reasons to believe that there's some type of bearish momentum coming. So the other way we were looking at that was with the S&P 500, and the S&P 500 has just been phenomenal in growth throughout this. Again, remembering these are huge markets, and so the phenomenal in growth is just really relative, I guess, to how much money is in there, or supposed money. From the point of control, up 30% for the S&P 500 with basically no retest of the top of the previous area of the range. So, which is what you'd expect to see, SOS, LPS, and the final run up after a new LPS. So I think that LPS for the S&P 500 could be as low as 480, which could, again, for something like Fetch could be a massive drawdown, maybe even to 90 cents, let's say. There's more than one time we've seen Fetch come down 70 to 80% before going up another 10x. So I went over this yesterday as well too. It's just understanding market cycles and mentality. Here from early 2020, Fetch went up 14x very shortly after to retrace 80% to then shoot up another 12x to come down 80% to then go up 4x to come back down 90% to go up 10x to come back down 60%. So in the first market cycle, twice, you had at least twice before the final peak where fetch came down 80%. And the biggest drawdown we've seen so far in fetch is like 30%. 30%. So that could be well, actually in this one too, technically this market cycle down was around 60 to 80%. So I think expecting some type of higher volatility at the moment. Solana as well is actually bouncing right off our simple moving averages on the 4 hour, about to turn up to the top of the band. This is going to be critical. This is where actually the bear claw will be kind of handy. Do we close above the point of control and the EMAs? Or do we jump back up, can't close above the point of control and the EMAs, and then get rejected even lower? And there's also a possibility where we shoot up. It looks like it's going to be an SOS, and then the backup phase comes all the way back down in the middle of the box. This is the most difficult trading range to follow. And again, we're late on to this particular cycle, so that I wouldn't put it past the market. You see a big market cycle up green, and then very quickly afterwards it turns around and then goes red all the way back into the middle of the box. So yeah, just an important time to keep an eye on the markets, because it's going to tell us the next big opportunity. There are a few things I've been looking at doing here, just to protect downside for the most part. There will be more upside coming, so that's it. Let's take a look at some of your guys' thoughts and questions. Nice eating carrots, learning on YouTube with Tio. Thanks, guys. Appreciate it. Awesome. Okay, yeah, so here we go. I've got Avalanche on the chart as well. Again, a little messy. I apologize that I just didn't have time to fix everything back to the way it was. Getting close though. So again, here, very nice trading range for Avalanche. A lot more volatility in there than we originally expected, which was clear a few times. Very harsh drawdowns made it much more difficult to trade. And here also as well, in the middle of what should have been a spring, we continued lower. So I do suspect we're going to get a run up to test the top of this, though. I don't think so. It's going to, one of two things again. I think Avalanche, Fetch, they're all about to tell us the same story, which is that we could probably get a run up all the way to the top of this trading range at around $52. And if we come back down and test the box and we go up, cool, awesome. That was just a spring. We continue higher right away. Or we do this, we can't get back into the point of control, and we turn and come down. And we probably come down pretty harsh for many assets. Again, we're already through a big part of the drawdown effectively as well. I mean, if you think about from all-time high or previous high, you're down 30% for Avalanche here already too. So we could recover maybe 15% of that before getting rejected and going further, or we recover, this turns into a spring and we get one or two more big ass runs. Again, I just have this weird feeling that Bitcoin's price is going to go down into and after the halving, unlike any other time it has before, and it will be a large part to confuse narrative. As you spend more time watching markets, you see that the news often has to do with confusing narratives. Maybe not on purpose, maybe on purpose. Some of it's definitely on purpose, I guess. So yeah, just to keep an eye on. I thought it'd be fun to go over kind of rewatching these pieces. You get to learn so much here. Yeah. So do we see a spring for Avalanche? Return back to the top of the box and come back down lower, or re-enter, test, and continue higher? I feel like coming lower is the stronger of the probabilities at this moment, especially with fetch up as high as it is. It gives the markers of like it needs some type of correction. And same with Solana too. Solana hasn't had a correction at all. It's just only had reaccumulations, and a few of them on smaller time frames into our bigger time frame now too. So to expect that this one's going to be reaccumulation off the bat, I think is probably a bad move. But anyways, just keep that in mind. Let's see how it plays out. I was actually really impressed from the market basically open today. The S&P 500 too has bounced like 1 or 2%, which again is huge in these ancient dinosaur markets. But if we go in on the 2 hour here, yeah, nice candle. So I think the S&P 500 is also going to give us that story. Do we come back in the box, or do we start to close below this range for the first time? We'll see soon. Anyways, just a quick little video update. I wanted to share some thoughts. Hope you all enjoyed the live stream, and we'll see you again on the next one.